So, hi everyone. I am here with Luke. Luke, why don't you go ahead and introduce yourself?
Hey everybody, my name is Luke Morris. I am a lender and broker here in the St. John's and Jacksonville area.
Awesome. So we're just gonna jump into it and have a quick conversation. There's a couple different questions, and we're just kind of roll with it. So, what inspired you to become a loan officer, mortgage loan officer in general?
Great question. So, just practicality. My path into the mortgage industry wasn't planned out at all. Kind of COVID related. Kind of drew me in. So I graduated UCF December 2019, so right before COVID hit. And my initial plan was to take a gap year and then take my philosophy degree and go to law school. Gap year probably wasn't going to happen as soon as we heard about COVID, right? All the going into law school, going out of state, all that just like threw a monkey wrench into the plans. So after graduating, I had started doing production work with my mom's company. Not that she ran it, but she worked at a company that did swimsuit modeling and whatnot. I wasn't the swimsuit model or anything, but they did production work down in Miami all the time. So I was doing that while I was trying to figure out exactly what I wanted to do. But COVID happened, so that stopped.
Yeah.
And super interesting. My mom also has a house here in downtown St. Augustine, great area. And I was staying there. I was running around, just staying, fitness cardio. I was going on a run, I think across the Bridge of Lions or something. And a friend of my mom's who she babysat when she was younger, yeah, but he had just opened up a mortgage firm over there in St. Augustine, and it was just him, super small shop, just getting started. He came over from a bigger company, branched out, make his own broker owner situation, but he needed someone to help out. It's a lot of documentation, processing, paperwork that comes with business, especially back a couple of years ago. But we've had a lot of fintech companies come into the mortgage industry, and help out with that. But before that, a lot less streamlined. So he's like, "Hey, I just saw, hey Laura, my mom, I just saw your son running around. I think I saw on Facebook he just graduated. Does he want a job?" So I was like, "Yeah, I'm not doing anything right now because we're, everything is stopped." So
Locked down. Yeah.
yeah. And so I went, had lunch with him. We hit it off. It made sense because, I mean, I had never thought about real estate or, the industry at all. Like I said, law was my path, but real estate was going to do really good during COVID because the government was stepping in, buying mortgage bond securities. Obviously, rates were really low, so that put increased pressure on the market and demand and everything. So it turned out good. I got in. That's how I got introduced. I processed and whatnot. I wasn't stepping right into loan origination, and we stayed busy for a solid 2 years. And I was just processing, doing all that work. I was really doing a lot of LOA stuff. Like I said, it was a really small shop with just me, the owner, and we had a couple other great employees too to help out. But so there was a lot going on for everyone because it was a busy time. So I got a lot of good experience that way. And then 2022 came around, and I had always at that point, now that we're kind of past like, I'm not sure that I want to go down the law path after taking 2 years out, being in a whole different, it's a whole different part of your brain.
Yeah.
Yeah.
It's a whole different journey.
Exactly. So I was like, I know everything from processing. We did a lot of loans. I think we did 200 million in those 2 years or something for volume. So we stayed busy because you got to think there was a lot of purchases, but refis. So for every purchase a realtor is seeing, think of brokers seeing an equal amount of refis.
Exactly.
Yeah.
100%.
So, but 2022 last year, rates increased, business slows. I have more free time on my hands. I'm like, let me step over to the LO side, and that's how I got here, and I'm loving it.
Awesome.
Yeah.
Very cool indeed. So, like I said, it's a whole journey.
Yeah.
And just like, and that's one of the things that a lot of people just don't realize is like sometimes you think you're going one particular path and you are just gonna go somewhere else, and things kind of sometimes
but it
just
works.
Yeah, exactly. It works out.
Yeah.
Sometimes things just sort of like fall where they need to fall. So that's pretty awesome. So so you mentioned earlier as far as like things used to be a little more analog now they're way more digital. Like, how do you keep up with all those changes and technologies and processes?
So I am the type of person that when I get like invested in something and interested in something, I get like hyper focused on it and whatnot. So I geek out about the mortgage stuff. It's a slower business, so it's not like there's news happening every week or whatnot. I mean, the market's been volatile and stuff's moving for like the smallest amount of news, and it's just like I just wish the market would stay put. So everyone that's on the sidelines there, it's kind of like not as hesitant, because I mean, you come in now and you want to lock a rate, that rate may be completely different in 10 days because the new data comes out. So like as soon as we get over this little tumultuous economic time, that will be nice because it'll slow things down. But like I was saying, there's not a whole lot coming quickly in this business, but there are important things that get updated. So for that, I have a couple good podcasts of like some really, really successful LOs, like one's out of Orlando. I think Waterstone Mortgage, DO, the Loan Officer podcast. I watch that a lot. I think there's probably a very niche amount of people that will hear this and know what I'm talking about, but he's great. Then there's Mortgage News Daily. There's some good sites, some MBA sites, just like making sure you're up to date and following the accounts of like the Mortgage Brokers Association. Any major updates though, I get from those sources basically.
And so how do you communicate that information to your clientele?
Well, the biggest thing I can do, one is just like all these updates are with everything in the mortgage industry. It's not like a one size fits all thing. So typically I communicate those to the borrowers as it's relevant to their unique situation. But social media obviously helps, and then just communicating it to realtors like yourself, because you guys have a lot of time and FaceTime with the buyers and whatnot. And you're in the trenches. Yep. So just talking shop with realtors, staying up to date, and staying pretty consistent with social media, making sure people that are in my sphere know good information. So I stay up to date with that stuff.
Cool. So are there any types of loans that you specialize in?
As far as specialized in, I would say just generally, because like there's commercial and there's residential. Generally residential. In Florida, I believe I can do commercial. I've never stepped in that field. It's a whole different ball game. But as far as residential, I would say my specialty is more non-QM, FHA, conventional VA, because you can go residential, but you can go non-QM with like a bank statement loan, a DSCR loan. There's all sorts of products. Those are typically not the one for your first-time home buyer, your second, investment. They're going to have higher rates. They're going to have higher down payments. Normally, you go those non-QM routes only because you have to, right? So I would just say, my real specialty, my real, I have knowledge everywhere, but the most like extensive knowledge is going to be non-QM.
And for people that are watching that may not be familiar, what is a non-QM?
So a non-QM, great question, is it's a conforming loan. So Fannie Mae, Freddie Mac,
so
they're quasi-government. They are going to be the secondary market that buys loans from lenders. So like, just so you guys know, lenders are not holding your loan. They are selling your loan to someone else and making money off of it. They can only do that if they go by the secondary market, the people that are buying it, their guidelines. So there's conventional guidelines, FHA guidelines, VA guidelines. For those specific loans, you have to check all those boxes. That makes it a conforming non-QM loan. That makes it sellable. When you go non-QM, that's when you get like the higher like risk profiles, higher rates and whatever, because they're kind of basically, you go non-QM if you're writing a lot of stuff off on taxes and whatnot, but you show a lot of income on your bank statements. So that's why you go that way. But because you're not showing it on the tax return how you would in on a conventional, Fannie Mae, Freddie Mac, they're not going to buy the loan. So that's why they charge extra interest. That's why they want more down payment, because it's higher risk. They have to actually hold that loan. They're holding that risk, whereas another lender with conventional guidelines, they got to carry that loan for a month. So you're never going to pay them for it. Like, it's going straight to another investor. So that would be the difference.
Okay, cool. So how do you determine the best loan option for a specific client's financial needs? Like, sort of whole qualifications that you go through? Or
Well, first we got to see what they can do, what
Mhm.
they can afford, what down payment, like how high can we go with the down payment. So once we get that situated, then we start, are you more concerned about equity? Are you more concerned about the payment? Do you not want to have specific MI, but a larger down payment? So that's really a personal situation that it's going to depend on the client more than me.
right.
But yeah, have that conversation with everyone, and we find out what their preferences are.
Yeah, find out exactly what's most important to them as far as like the monthly payment, or some people are worried about the interest rate when you know monthly payment is the most important thing,
Exactly.
because your interest rate can be 17%, and if you can afford this per month, if you can only afford say $900 a month, it doesn't matter what the interest rate is. If you can only afford $900, you can only afford $900. So
Yep.
so I definitely understand having those conversations. Absolutely. So
Very good point.
so kind of branching into that a little bit. So how do you handle difficult or complicated loan applications?
So I like to, if I see something that raises my eyebrow on a loan application, it's best to really just have that conversation with the borrower straight up and get on the same page, because it's going to affect the road we go down, right? It's going to affect if we have to go QM or non-QM. So I understand that there are some borrowers out there that want, because it's finances, they want to keep everything very close to their chest. But when you're going with a lender who is trying to literally get you the best deal, the best payment, the best bang for your buck, you got to be very transparent. You got to be very transparent about how you're getting paid, how you're taking distributions, how you're filing, how you're showing everything. So most questions and complications come up with that. Sometimes it's like a residency thing. Sometimes it's just their occupation, how it is. They're moving from job to job to job, like
Right.
maybe a
Like
trucker or something. Like they're taking maybe 17 different contracts a year,
exactly. I
right?
was going to say a contract worker. So something
Yeah.
like that. Absolutely.
So you just want to have all those conversations and be very transparent in the open, upfront conversation, and make sure you're with a lender who knows to ask the right questions, because the worst thing I can imagine would happen is the borrower goes to a lender, they think they're on this path, they get all the way close, and then they're like a week away, and underwriter's like, you can't do this.
Right.
Yeah. And then the lender's like, well, I didn't know it. Borrower didn't tell me, but you didn't ask the question.
Yeah, exactly.
Yeah. So just being super, super, one, just asking the right questions, not being afraid to ask the right, like, I know sometimes it seems nosy, but like I gotta know.
Yeah.
I gotta know, because they gotta know when they have the money, right? And
Yeah.
they're good.
Absolutely.
So yeah, just being super transparent, not being afraid to ask, hard questions sometimes, but it's information that has to be known.
So how do you handle a situation where a client may be struggling to meet those mortgage loan requirements? So
Um, well, it's very true, especially in like a high rate environment now with like how rates affect DTI. Not everyone's ready for a home right now, and that's so fine. The main important part is that the person is motivated to get into a home. So even if they have issues with the mortgage, like loan application now, and it's like, I don't think we'll be eligible, it'd be super tight at this price. Maybe you have to go for a lesser price than you want, or maybe we just we track the rates and we track the trends, we track the treasuries. We can kind of project when the market may be a little bit more favorable for you. But you get a game plan going. Like you say, like, okay, this is what you want. Well, to get what you want, you need this, you need this, you need this. You're not here with this, you're not here with this yet, but this is how we get here. So like, I'm very fortunate to have great resources around me. So like, if there's issues, I can always refer out, and we can get those things solved and get that potential homeowner into a home as quickly as possible.
Definitely gotta have a good team that y'all set up as far as that goes. And I definitely
important.
appreciate that. When I was younger and I bought my first home, I had too much debt to income ratio, and that was something that my lender was able to point out. I was like, okay, so if you follow these things for the next 6 months to a year, we can take care of that. And that's what I did. I moved to a cheaper apartment. We cut a lot of the bills that we had previously, got a lot of that stuff taken care of. So, knowing that ahead of time was so less stressful. And when I went back, I knew all these more information. So
And once you're back, it's so worth it once you're in
right,
the house
absolutely.
too, right? I know like some people might hear some of these things that you recommend. It's like, ouch, I thought I was ready, right?
Yeah.
And they were so excited, but like it's time in the market. You get in the market, you're gonna be in the market, and you're gonna you know reap the benefits of the appreciation from your home asset now.
100%.
Like it's that's never an easy conversation when there's issues.
Right.
But at the same time, like I'm gonna be someone that's gonna walk you through it
Right.
and get you there.
Exactly. And everyone is on their own journey. So just because what works for me doesn't necessarily work for that person. And like, so I
Exactly.
totally understand. And once you get those expectations and you let them know this is how we're going to get to that path, it's
Yeah.
much better.
Yep.
Awesome. So we will move on to the next one. So, so you kind of touched on this a little bit earlier, but like, how do you work with other real estate agents and other professionals that are in the industry?
Are you just saying like my approach to like once we're under contract,
To
or just the whole
yeah,
entire
that kind, and then
dynamic?
like and to help build your business. Like,
Yeah.
how do you normally get like your referrals or your clients? I'm sure people just some of them may just walk in the door and be like, hey,
Yeah.
I want to buy a house. How do you help me? But like, what goes into that as far as that?
Well, it's a networking game. And just being available. I think availability is huge. Just like if a realtor or business partner knows that you're reliable and you're gonna be there to pick up the phone, I think that's a big part of the game. Especially if you have expertise as
Right.
well, then it's like, what more do you really want? They're gonna get the job done. So just one, letting realtors know that one, I'm in the business, I'm someone you can lean on, and then two, when that time comes, performing and
Right.
being, the person that they expect you to be in that role. And we're business partners. Like I want them to have the easiest time with the transaction. Like that's my role, and I want to communicate that to them. Like and I think that makes it easier working with realtors when they know that, hey, Luke is going to try to make this the easiest check for you, the easiest purchase for your borrower, the most seamless, selling transaction for your seller. Like it, because financing is the sticky part, right? Like
Yeah.
I know there's home inspections and stuff on that side as well, and that affects the financing. But when there's issues, it's on the financing side. So if you can get a lender that really can make sure everything's very clean and submitted properly and whatnot, so that's a big deal. So just being reliable and available.
Definitely. And I'm not known you for very long, but I already know that you're more the roll with the punches kind of guy. So
Yeah.
like even like situations that come up and you're totally kind of flexible, and so that it's really appreciated, especially when you have a good lender and didn't help you out with that. So so let's see here. So now can you give me an example of a particular challenging loan application that you worked on, or maybe some obstacles you had to overcome? I'm sure I mean, just the previous market alone, even if you've been doing this for 20 years, the last 2
I got
years
some good stories.
are, I'm sure, full of them.
Yeah, I mean, I got some good stories. Recent one that closed. Guy changed jobs a week before closing. Right. I mean, I mean, This was. Let me just say, this was going to be. There was a lot of moving parts in this file.
Yeah.
I anticipated that, so I was very, keeping it very close to me. Like I'm gonna make sure this is done right. Because like there's some files that you can just kind of go over the basics and then kind of hand it off to the processor and they got it. But like when there's a lot of moving parts like this one had, I want to keep an eye on it. But yeah. So we're a week. I'm expecting a CTC like the next day, and they clear to close.
Okay.
So if you're a realtor, if you're a broker, if you're a buyer, if you're a seller, that's what you want to hear. That means the lender is like, I'm sending you the money.
Exactly.
But so you're expecting that, and I get the call like, oh, we're now working for ABC instead of DEF.
Yeah.
And that, and listen, it is not typically, so because like some HR departments with these big companies, they can take a while to process like a new verification and just like checking everything out for the lender, which the underwriter is going to want in order to CTC that file. But The real processing time is coming on the lender side because you'll submit something to the lender, but that lender is going through hundreds of loans a day. They only have so many underwriters, so it might take 3 or 4 days to get that in front of someone to just say like, okay, that's good.
Right, yeah.
So that was my worry when we're a week out, we're changing jobs. Can I even, one, get this back from the HR department in time, two, get in front of the underwriter in time, and then three, get everything out for closing in time. We did. We still closed a day early, but that was definitely a curveball. Another one is, and this has happened before, so people that are here on visas sometimes don't understand that's not like full citizenship. So they'll mark like, yeah, I'm a full U.S. citizen, and then we get down the line and it's like, no, there's like fraud report, a flag on the file saying that it's not, a U.S. citizen social security number. Right. So that takes a bunch of government documentation to go dig up, and if you don't have it, you gotta go request it. And we know how the government works and moves very slowly, so like that's always, out of left field when that happens. I've had that happen before, mid-file. Thankfully, they had their documentation, with the exception of one of the documents. That's all good, and then we kind of got to like, cause like there's guidelines that we go for these conventional loans, but there's a little bit of gray area, wiggle room that you and an underwriter can talk about and just be like, yeah, I think that the secondary market would agree that this satisfies this condition, although it's not by the textbook. I think they'll still buy this loan, and like, so you have that conversation with the underwriter, so you can still get things done that way, which we did for this particular instance. But yeah, it's always not the best phone call when you're like, your borrower is not a citizen, right? Yeah. But there's solutions to that. We find solutions. That's all you can do. I mean, you can't just be like,
yeah, this is walk away.
Yeah, right. So there's that. We've had post-closing problems before, although super rare, just because underwriting is so good nowadays. Also very strict. Like anybody who's gotten a loan recently knows they don't ask for your blood type, but you're kind of surprised they don't, right? But everything else. So last year we had an issue where a lender's supposed to do third-party credit searches throughout the process to make sure that the credit report you gave us hasn't changed at all. You didn't open up new accounts affecting your DTI and your eligibility. We closed the loan that I worked on last year. The borrower co-signed for their daughter's car 1 week before closing. It didn't pop up, so they closed. They got the money, but now the lender. But it did pop up after the fact. When Fannie and Freddie were going to buy the loan, they want to do their due diligence. Like, we'll do a third-party search real quick. Oh wait, there's a new trade line. Right. And oh wait, now the DTI is too high. This is too risky of a loan. I'm not going to buy it. So the lender now comes back and is like, broker or borrower, one of you guys is paying me this money, right? So, I mean, attorneys get involved. It's never fun. And it's not like it's animosity. It's just like everyone wants to cover it. No one wants to be responsible. Exactly. Like, I don't want to just 300 grand or whatever it is, right? Yeah. So luckily with that, I was able to go back, look in the file. We were using retirement assets to qualify. We were only using maybe like half or a quarter, because that's all that was needed to get the DTI to the number. So I was like, hey, let's just go back. Let's show an additional asset statement showing that she has this much more assets, and you can use assets as income for Freddie or Fannie. Freddie, I think both, but they divide it differently. Like, one is divided by 360 versus 240, so you get like a different number. But we increase income that way, and once we proved that, then Fannie and Freddie were cool with buying the loan. So everyone was happy, because if that doesn't happen, like I said, either they're like, you're gonna pay us all the money back now, or we're gonna make you refinance a market rate. And if you guys know, this would have been we did the highest increase, I think, year over year. Mortgage rates doubled. It's never happened. But so they were not wanting to. They probably, I mean, they would have been fine having to, but like, you don't want to refinance from a 3 to a 6 if you don't have to. Of course not. So everyone ended up happy, but that was an all-time curveball.
Right, absolutely. This is a great thing about having a good team that talks about it and has all that communication, because a similar situation with me is like, I sold my previous house and then bought a new house, and I waited because I knew that I was going to be paying off my car. I was going to be doing all kinds of different things, using that money to just make life easier in general. But I because I had such a great lender, personally, but yeah, it works.
Sure, it's great.
Yeah, he was great. He was all like, "Look, so you're gonna have all this money. Let it sit." Like,
Yeah.
and because as soon as everything's done, because you start moving things around, the government gets a little bit worried. Why are you moving this around? What was this a valid purchase in the first place? And so having that communication, having that team to talk about all that stuff, kind of really super helps, especially because sometimes it's not always up to the day of. Sometimes it's the day after. So because this is great for that.
Very good point.
All right. So, what advice would you give to a first time home buyer who's looking to interview, as what I would say, for a lender? Because you want to make sure that they know what they're doing, you know what you're doing. What's something that they should be asking if they don't know anything?
One, they should be asking: is there any great loan programs that what's going to make it most affordable for me? And if the lender has a game plan based on like your income or the area you're shopping for, or just your unique credit profile, what's out there to make your financial burden the least? Like, it's definitely, you want to lend it, because like some lenders out there, they're just gonna give you, your little cookie cut thing, and like either you qualify or you don't. But like there's some that'll really work for you. Make sure you get these more unheard of niche products and whatever that could help out. So I would definitely ask about that. I would definitely first be super transparent and upfront about like just everything that is going to be on the loan application: employment, residency history, status, assets, all that, credit. But I would ask the lender, is there anything that they think, based on the loan application and what they've heard from you, that raises any type of red flags that we might have to go through in underwriting? Because it's so much easier and so much better, I think, for the buyer if you do all that up front. Right. So I would just make sure that if I'm a buyer, like I don't want to be bothered a week till closing about something that we could have had a conversation about up front. Right. So I would just, as a buyer, be like, listen, dude, we just had this conversation. You know my profile, what's going to go into the loan and everything. Do you have any questions for me? You want to make sure that they are completely exhausted out of questions, I would say, because if they are, that means they got a really good game plan for you.
Okay, awesome. So going into their office, if they don't ask you enough questions, then that's a red flag for you to know.
Yeah.
But if they don't ask you enough, then they don't have what they need to know.
The lender should be very curious, unless unless you're just like super like W-2 job is like high, low debt to income. Some files are just like very straight to the point. But if you have a suspicion that maybe you're self-employed and it's not quite like that, and maybe you take K-1 distributions versus like a Schedule C and whatever, like your lender should be asking like some questions, right? Because it's gonna definitely affect your underwriting income calculation, which is gonna affect your DTI, which is gonna affect your affordability, which is gonna affect what you gotta put down or whatnot. So, and what else, like purchase price you can even offer. So, if your lender is exhausting those questions, it might be a little annoying at first, but it's better be a little annoying at first and then just chill, right? So, yeah, that should probably be the good route.
Yeah, because no one likes surprises, especially when you're trying to buy a house. Like, some surprises are good, birthdays, things of that sort.
Yeah.
Buying a house, surprises are very rare. Very rarely good.
Yeah, no. I think the best surprise you can get probably in this market is just like instant equity off the appraisal, right? That's a good surprise. Anything else, though,
right.
Yeah.
So we're kind of wrapping up here. I ask a lot of my guests a similar question, because this is a local podcast or video series, as we call it. So we want to represent locals and things of that sort. What is one of your favorite local spots, like, for a great meal? Or
so this is a hard question because I'm from St. Augustine. There's a ton of great restaurants down in St. Augustine. But since I'm also here on 210, a little bit of a soft spot.
Northeast Florida in general.
Yeah. Well, anywhere. Well, I want to give some good kudos to Green Papaya across the street, but they also have one in St. Augustine too, right over there. So great sushi spot. This one has a robot that bring you your food and everything. It's kind of a glorified Roomba, but it's a robot. It's cool.
Awesome.
Really good sushi, really good Thai fried rice. The heat scale is 1 to 3. 3 is pretty spicy. So if
Oh.
you're not into spicy, get 2 and below. But
Right.
great food, great service. Yeah, I can't say enough good things about them.
Very cool indeed. And so, for like I said, for everyone else out here, how can people find you? Where's your social medias, your websites, your local office, aside from here?
Socials, well, local office. I mean, I'm a very flexible guy when it comes to like work and stuff. Like if you can't meet me here on 210, like I will come and drive to you. We'll sit down, grab coffee or, phone, whatever, like seriously, whatever is most convenient for the client is going to be the best situation for me too. But you can find me at Luke Morris Lending on Instagram. We're getting that set up. I don't even think I've posted there yet, but it will be a great spot to find relevant mortgage news. I promise. Luke Morris. I have 2 accounts on Facebook. One is of me with a nice tight little whatever dress shirt and whatever.
Right.
So that's gonna be my mortgage. And obviously, you'll see one is probably me liking like a cat video, and the other is mortgage related. You'll know which one's which. So you can find me on Facebook there. If you want to just go and find me online, Motto Mortgage Titanium, which is my branch here that I work for in St. Augustine. You can actually go in there. It's like about us, the loan originators. I'm in there. You can go straight to my loan application page that way. Find me there. But yeah, if I'm here at the coffee shop all the time, and I have a tab, so if you guys want to come and get some coffee, on me.
Awesome.
Yeah.
Very cool. Yeah, and I'm definitely included in that show notes as far as that goes.
Yeah.
But other than that, it's been great, like as always, and you have a great day.
Awesome. Thank you, James.
Definitely.